Hey everybody, we've got a great episode today. We're going to be talking about an alternate payment option that can be critical for your business, especially if you're shipping internationally. Hey everybody, welcome back to SUBTA Studios. I'm your host, Chris George, co-founder and chairman of SUBTA. Today I'm here with AG from GoCardless, a company that makes it simple to collect recurring and one-off payments. AG, thank you so much for being on.
Great to be back. Good to be on again.
So AG, let's get right into this and tell me a little bit about why businesses and subscription businesses should be thinking about account debit for one-off payments or for recurring payments.
Yeah, so recurring payments. Okay, so there are a number of benefits of using bank debit for recurring payments, and the most fundamental one is that in a B2C world, when your option is credit cards, they're costly. They cost between 1.5% and 3% per transaction. And also we find, and Forrester highlighted the fact that there's high failure rates, and a lot of the failures of the payments turn into churn. So bank debit churns are far less, and it also has less fraud as well. So there's a number of reasons why that option is a good option. Now, the other thing is it is actually the preferred option in most of Northern Europe and Australasia as well. It's the number one option. It's not in the US where we are. It's obviously credit cards. But in lots of markets, you'll find actually a lot of people don't even have credit cards. And so offering bank debit globally as an option in payments as merchants can do in a recurring business can deliver a lot of benefits in a lot of areas.
So I think it's always wise to have giving the consumer multiple options for payment methods, right? Because you've got credit card, you got Apple Pay, you've got PayPal. And so I think having more options is good. But it sounds like if your brand is international, this and your US brand, this is probably pretty critical.
Yeah, so the strong preferences in big geographies like Germany and France, where it's the number one option. So if you're not offering it, then you're going to lose out on customers. Yeah. And number of people in, say, Italy that have credit cards is less than half. So there's a big market untapped out there where this is the preferred option. So from a B2C standpoint, it is a great option. From a B2B standpoint, from recurring billing in a B2B, it is very strongly preferred in most of Europe. And in fact, many of our customers, we've got 900 customers in the US. Many of our customers, they've been dictated to by their end customers in those countries to say, we want to pay this way.
Tell me how this has an effect on, and I think I know, but I'd love to hear from you, on Ltv and Cac, and how this helps with that.
Well, it helps massively because 11% of failed payments, this is according to Forrester, turn into churn, and churn will kill any subscription-based business. So lifetime value of the customer is a function of how much revenue you get over a period of a lifetime. And if you're churning 11% every set of payments, then your lifetime value is going to drop dramatically. And so that closing out that number and changing that number changes the lifetime value enormously. And the customer acquisition cost as well. I mean, just every payment is going to cost you less. Sure. So that's not a massive benefit, but the customer acquisition cost is also related to the preference. So if you're not offering what they're paying, then you're not even going to capture that customer. Right, so we're not going to replace credit cards. We're saying we're an option alongside them. Let the customers choose, and then you can A/B test it thereafter, and you can decide, which one you think you want to push. Where, on the real estate on your phone, where's the button for each one of them, and, sure, and so on and so forth.
There's tremendous benefits to having this alternate payment option. What would be some of the risks involved in adding this payment option?
Well, that's a great question, because historically, the challenge before open banking, the challenge with bank debit is that there is a period of handshaking between the customer's bank and the merchant's bank. So the access to the funds is delayed. Okay, so there is a 3 to 4 day delay. So it doesn't really work for those types of services where you need an immediate delivery of the service, like streaming, on-demand services like DoorDash or Uber Eats or something like that, where you want to be able to offer, you capture the customer, and on that conversion, you also then deliver the service. It's not until open banking, it's not been appropriate for that. So we've been in areas, we major in utilities and gyms and banks, and then a lot of, recurring payment streams of SaaS companies, for instance.
Are there risks also, though, where you debit somebody and they overdraft and then they get mad. Oh, I didn't know you were charging me. You just overdrafted my account. Let's talk about that a little bit.
Yeah, that is a feature. So, I mean, what we do is, you put an authorization, the merchant puts an authorization on the end user's bank account, and, insufficient funds is one of the codes. And then there are a number of techniques you can have to retry that. So we have a whole product called Success Price. We use AI across the 66,000 customers. Our overall payment failure rate in most sectors is below 2%, and in many below 1%. It's way less than credit cards.
Sure.
In terms of failure rate.
But do you find that some people, it does overdraft some people, and then that becomes a problem?
Yeah, so this is one of the great things about open banking. So the access to the account, open banking, customers give access and consent to the transactions, access to the account. And then at the point of, signing up, you can actually then check, have they got sufficient funds? And you can make intelligent recommendations. Oh, you don't have enough money in this account, but you do in this account. So yeah, that solves that problem to a large extent. And when you think about it, with the recurring payment stream, that's one of the challenges. Credit cards run out of credit. You change them every 3 years. You've got 2 or 3 of them. You lose one. All those kind of things end in churn. You don't change your bank accounts that often.
And then there's obviously, is there a cost savings to the merchant to get paid via bank to bank versus credit card? I'm assuming there's a savings.
I mean, the cost per transaction is obviously a fraction of a credit card, and also you can cope with much bigger transactions as well. A lot of our B2B customers, they're sending, it's $100,000 a transaction. You just can't do that typically on credit cards. So the costs per transaction is a lot less, and also churn is, the actual cost of the transactions is a fraction of the savings that you would get by just lowering the churn.
Right.
As well, and getting higher conversion rate in so many countries where it is the preference.
Do you think the consumers will start to adopt this more in the US, or is this an international thing? Why in some of these other countries are people using more ACH versus credit card?
Yeah, I mean, that's the great question. The US, as usual, is different, and in interesting ways. I mean, we're still sending checks in the US, and I mean, they've dropped a lot. They've dropped it. Yeah. ACH numbers have gone. I was reading ACH latest report that 9% growth on a colossal number through COVID, and so I think it takes time, but I think what's going to drive it, and I really believe that what's going to drive it is those large organizations, large global organizations like I've mentioned, like a Netflix or a Spotify, or those kind of organizations, because they want to offer the option and they'll see the benefits of their global audience, and then they will incentivize. I mean, this is my Verizon phone. They gave me $25 off to pay on ACH rather than credit card. So that kind of thing is going to be more prevalent, I think. Yeah. It'll be the vendors, and the preference in Europe is for bank debit, and open banking gives them an extra piece as well. The preference in the US is credit cards, but the global vendors will offer it as optionality, I think.
So I'm pretty sure like my mortgage payment and a couple other utility bills, like setting up recurring payments ACH was the discount. And it was definitely a bigger discount than the processing fee, but it must be because of the things you said, which is the lower churn and the more likelihood that the payment will go through.
And the difference now is with open banking, you've got you got account verification. We embed Plaid underneath the covers of ours, so you can get a very verified mandate, and you get instant first payment. So you've not been able to have that with ACH up to now.
Yeah. Well, AG, this was really great. That was some really good insight. I think some really good takeaways from this is that having multiple options for payment methods is a good idea. Having global ACH gives you the opportunity to expand to countries that have a preferred way to make payments via bank to bank. And then there's a cost savings. So AG, real quickly, why don't you tell everybody how they can, how GoCardless helps brands do that and how they can get a hold of you.
So we are GoCardless.com. So we're the leading kind of recurring payment provider who specialize on bank debit. I actually moved to the US when we had a funding round where Google and Salesforce invested in us, and Google actually sit on our board as well. So we're based in New York and San Francisco now in the US, and we've got 66,000 customers around the world. The interesting thing from most people considering us is that we're already embedded into 250 plus ERP systems. So the way you adopt GoCardless, you can essentially go into their app stores and implement it that way, and the integration's already there. So it's a configuration, it's not anything else. And then, you know, we have onboarding specialists and customer success, just like everyone else, to help people become successful. So that's really it. And we're not replacing credit cards, we're not replacing wire transfer. We're just saying you might find this will get you more business, and it will be more profitable business, and your LTV and CAC ratio will improve. And so just try it.
Amazing. AG, thank you so much for being on. I know we have another episode where we're going to talk about open banking. So again, thank you so much for tuning in. And AG, I will talk to you soon.
Great. Thanks very much, Chris.